All right, it is officially 8:01. I'm going to go ahead and get started. Those that are joining, come on and pop in. If not, I'll continue to go until we get this information out to you guys. First of all, thank you for coming out on this Thursday evening, June 1st. I just wanted to. Hello, Kimberly, how are you? Hello, welcome, welcome. All right, so I'll go ahead and continue. Thank you guys for coming out tonight. I'm pretty sure a lot of people will be joining here shortly, and I'll try to let them in as we go and try not to interrupt. But thank you for coming out today, June 1st. We're going to be talking about commercial leases. What a great opportunity to hear about a high level of what you should expect with commercial leases. So, first of all, I'm going to show you some information. If you had not already, this is our white page list. If you're not receiving emails from Texas United or United Real Estate, please use these tips to kind of help you get your emails. If you're having trouble, you can call someone up at the office, Shelly, Avery, myself, Amy, anyone, to make sure that you're getting emails from us. And if you're receiving emails, don't worry about it. You're all good. All right. But if you are not, here you go. Take a snapshot, wait a second, then we'll move on. The second piece is our private Facebook page. This is another way of communicating with other agents, maybe asking questions that you want to get answered right away or just want to get somebody else's opinion about how to handle a scenario or what to do in a scenario. So please join this. This is not for the public, unfortunately, or other outside realtors. If you decide or want to know about inviting someone like that, please reach out to Fernando, Amy, or Carol. They are the ones that can make that final decision on that. Okay. But please, if not, join our Facebook group. It's a great way of sharing information. And then, of course, we have our 2023 conference coming up this September. I don't know if you're a person that goes out to Disney World or like to go to Disney World, but that's where it's going to be. September 10th through the 12th. It's going to be in Orlando, Florida at the Swan and Dolphin Resort. They've already got some room blocks. It's going to be exciting. There's a lot of keynote speakers. I didn't go last year, but I'm definitely going this year because I heard it was so fun. I want to make sure that I don't miss out on any new information that'll be coming out this way. So if you have any questions, you can go on Bullseye, or once again, you can reach out to someone at the office. They'd be more than happy to kind of answer that for you. And please let me know if I'm going a little too fast or if I'm going too slow, or if you have questions. I'd like to make sure we get those answered as we go. All right. So the agenda tonight, of course, we're going to be talking about your introduction to commercial leasing. Want to make sure you have a high level understanding of what to expect. We can do a sidebar later to kind of help answer any other additional questions. But I really want to just put some information out there so that if any client approaches you, you kind of have a little bit of information you can share with them, or you can know the steps that you want to take. All right, so introduction to commercial leasing. The next thing we're going to talk about are the 5 most common commercial lease types. There's more than that, but I'm just saying the most common ones, and we'll talk about those tonight as well. And then commission expectations. I know residential, you always hear them talk about 50% of 1 month's rent or a certain amount. We're going to talk about that in the commercial world. Okay. And then at the end, we'll have some Q&As. I try my best to pull a lot of information and source out as much clear and concise information as possible to help with this presentation tonight. For the most parts, I use square foot, but you can go out there and you can Google any information that you want, or YouTube. It's so much out there, but I really just wanted to get something straight to the point to make sure that, there's no confusion. And then also it just opens your mind to what to think about and what to ask when you're working with these clients. Okay. All right, let's get going. The introduction to commercial leasing. You know, and I tell you, buyers, tenants, business owners, they're just like the regular residential ones. They think that they can do a lot of this work with no help. Some of them can. I'm not going to knock that, but there's a lot of moving part and intricacies that they're going to need some help with, and they don't know until they get into it. And unfortunately, commercial leases typically you see them start at about 3 to 5 years, 7 to 10 years and above. Rarely do you see a commercial lease for a year. You may have a small suite, like a little barber spot, or someone does some consultation where it's just a small room where you can get a yearly lease. But in most cases, they're going to want at least 3 to 5 years. So there's a lot of important information that's going to come up that tenant owner are going to need some help with. So that's why we know they're going to need some help from a broker. Okay. And that broker could be you. And that's why we want to kind of get ourselves ready so we can understand how to effectively answer these questions or point them in the right direction. Now, these terms and categories that I'm going to be talking about tonight, they're definitely not, the absolute rules, right? It's just to give you a general idea. Remember, every contract is different. Every contract is negotiable. So, just read the fine print. Make sure you understand what your client is getting into. And if you don't understand, maybe you consult with your attorney, which is going to bring me to my special note here tonight. Um, you know, in residential, a lot of this stuff is pretty straightforward. But in commercial, like I said, it could be a lot of different things that come up that you may have concerns about, questions about, or there may not just be any clear direction on. So it'll be a good idea for you if you're going to do commercial real estate, just to have a commercial attorney, a real estate attorney available to maybe answer questions for you, or you can maybe recommend someone to. And I say recommend lightly. You never want to just steer someone somewhere, but you want to give them options, particularly if they have someone that they already have on retainer, or they already been in, have worked some other deals with. Make sure you refer them, because most business owners, they have an attorney or someone that they rely on to give them professional legal guidance to help them through scenarios and transactions like this. But for you, you want to make sure that you're up on the cutting edge of information. And I don't want anyone out there trying to practice law, right? That's the last thing we want to do out there, is try to tell someone legal advice on a transaction that we are not suited to do. Okay. So you're also going to see a lot of landlords, because they've done this before. They have multiple properties throughout the city or the US, wherever it may be, and they have them to draw up their own contract, their lease agreements and things of that nature. When you run across those lease agreements like that, you definitely want to put another attorney in, just to give that buyer tenant some leverage to plan on the same ground, right? Now, if you're just doing a regular TREC promulgated form, okay, great. We can handle that. We can interpret that. But when we start putting a lot of legal jargon in there, let's make sure that we do the right thing and take a partner. Okay. And I suggest that on all commercial transactions, unless it's pretty straightforward, slam dunk deal, any kind of interpretation, other than the facts that are in promulgated forms, let's get with an attorney to make sure we're on the right page. All right. So the first lease we're going to talk about tonight is a full service gross lease. You hear a lot of people say this. This is where the tenant just pays a base rent and, their utilities or whatever the case may be. But as you go, you may find out after so many years, you may have an increase in your expenses, but at the end of the day, these rates are typically a little bit higher because they cover other things that you would have been covering on a different lease. But for the most part, you shouldn't have to expect any other bills outside of your utility bills. Okay. So tenant pays the base rent and utilities. The landlord pays for the building expenses, including maintenance costs, insurance costs, real estate tax. But what you do want to know is that, like I said, it may go up year after year, and you want to make sure that it's not written in that contract where you didn't understand it and you get surprised. Okay. So this is typically in like office building where there's multiple tenancies. Like, you may have a suite 130, a suite 150, or whatever the case may be. And there's no real way for them to give you a triple net, which we're going to talk about next. But for the most case, you're going to pay a base rent, and it may go up yearly, but it can't go up without you knowing about it. So it's going to be something written in your contract, right? So it's not they can go up on you every year and you don't know exactly what that's going to be. Okay. The next one is a net lease. You hear this a lot, though. This is probably going to be the most common one. And there's different types of net lease, right? But net leases are usually stipulated on tenants that pay a proration share of building expenses, taxes, insurance, CAMs, which is called common area maintenance. They take all of that from each tenant, and they take those expenses, they divide them up upon the suites, so the amount of square footage, and they give them a dollar rate per year, sometimes per month. They'll tell you what it is, but the landlord pretty much decides what that is based on their expenses, and then they'll give you a base rate. And in most cases, when you're trying to negotiate these, they will more likely negotiate the base rate before they negotiate the net rate. Okay, so hopefully I said that clear enough. But at the end of the day, you're going to end up paying rent, utilities, and then prorated share of the building expenses, property tax, insurance, and maintenance. Now I'm going to stop right there for a quick one, right? Because I didn't kind of put all those other ones on there. But a net lease can also be a double net lease, meaning that a tenant be responsible for two of those items. And then there's a triple net lease, meaning that the tenant is responsible for all three of the items. And what items am I talking about? Going back to these building operating expenses, the taxes, and the insurance and maintenance. Okay. So depending on what you guys negotiate, it would identify itself in the lease, whether it's a single net, a double net, or a triple net. And then the landlord would take care of the outside of the building, most likely the roof, the foundation, and some of the other things that they will tell you. It could be AC, it could not be, but it's going to be disclosed in your lease agreement. Once again, that's why it's important to have somebody look over that, or you look through and read the fine print so you don't get too carried away and don't, make your client aware of it. Okay. So this can be used on any kind of space, industrial, office, whatever kind of commercial building it is. But it's called a net lease. Net lease, triple net lease, double net lease. Any questions so far? All right, we'll keep moving. We can make it quick. All right, so the next one is a modified gross lease. All right. And really it's a combination of a hybrid of them both, right? Generally, you can do this as a net or a double net or a triple net, but what happens is, they combine, means, and it could be, you paying a portion of the operating costs, you could be paying some utilities. It's all different. The details will vary from contract to contract. But some modified gross leases tend to pay only the base rent and utilities for the first year, but in an additional year, they'll pay a prorated share of the building operating costs. Their shares of expenses would likely be based on a percent of the building that they occupy. So if you occupy 50% of the building, you're going to be responsible for 50% of the operating costs. So that's called a modified gross lease, right? Could be a combination of, how they want to get paid, whether you're paying for utilities or not paying for utilities, whether you're paying for expenses, not expenses. But it's a modified gross and it'll be explained in the lease. Okay. So typically the way you look at it is a base rent plus a portion of operating costs. Okay. And the landlord pay a portion of the operating costs, right? And this thing can be a wide range in a lease. So there's no one way to look at that. So I know, when I have a little conversation with people about what do you generally see, I mean, there's really no general rule of thumb with this. There's so many variations of types of leases. They can be different from all walks of life. So you need to be aware of it. And, of course, we don't expect you to know all of that tonight. But once again, I just want to throw out there a high level of understanding and the types of leases that are available to provide to your clients that want to do commercial leasing. Okay, modified gross lease. The next one, which is good because a lot of people you don't hear it a lot, but they kind of get them confused. This is an absolute triple net lease. I said absolute, absolute triple net lease, and this is where the landlord don't pay nothing. I mean, they don't pay for the roof. They don't do anything. The tenant is totally responsible for the building in itself, and most times it's a tenant that probably is a long term tenant. They pretty much have. Hold on one second. Went too far. They have kind of like, let me give you an example. The people that are well known out there that can get those leases based off of just their credit. So at the end of the day, sorry about that. At the end of the day, you will, not run across these as much. But when you do, just know that your client is going to be responsible for the entire building. Absolute triple net lease, meaning that the landlord is not responsible for anything. Okay. All right. One of the last ones is percentage lease. You find this more in retail, some in restaurants, but more retail than anything else. And this percentage that they want, it can vary. I mean, don't be surprised to see something 10 and 12%. Retail malls, they can get a little crazy with these things. So just be prepared. But one good thing is the base rent is pretty much based on a lower amount. But then that percentage of revenue that's coming in, that's where they make their money when, you pay that. So in one of these percentage leases, you normally have a lower base amount, but a higher percentage or a percentage that you're giving up of your actual total revenue. Okay, so then the last thing we was talking about is commission and expectations from commission. So most commissions are based on the base rent. So I'll just do a raw calculation here. I don't have one up on the screen, but just say, for instance, a person is renting 1,000 square foot, right? I don't know what's happening here. Somehow we're dropping and picking back up. Sorry about that. But we were talking about commission expectations. And I was taking 1,000 square foot building times $20. Okay. 1,000 square foot times $20 a year, if that's the yearly rate, that gives you right at $20,000. Then you take that $20,000 times the amount of years that you sign a lease for. Say, for instance, you sign a lease for a 5-year lease. You take that times 5 years, you at $100,000, right? And then $100,000 times whatever percentage that you agreed upon. I could tell you with leases, unless it's some crazy dollar amount or um, square footage amount, you can get on average about 4%. At minimum, you get 3%, but on average, you get 4%. But let's use 3% as a number right here. So you'll take that $100,000 times 3%, and you're going to get $3,000 on this transaction. So whatever your commission rate is, times the square footage and the dollar amount per year gives you your commission rate. And we can explain that offline, but just know the commission rate is not just 3% across the board. It can be 4%, it could be 10%. It's all negotiable. Now, some people will do a set amount of commission, just like on residential homes where you see someone, instead of doing 50%, they might just do a set $500. It could be the same here. But when you're doing your offers and what we call the LOI, you want to specify what your expectation is with commission. And I strongly advise before you even get to the LOI that you talk with the agent prior to showing the property just to verify what that commission is. And these agents can be a little tricky. If they don't think they may tell you anything. But the way I approach it is, hey, agent number one, how are you today? My name is Robert Griffin. I'm with Texas United Realty. Listen, I got a couple of properties that I want to show to my client. They're looking to open up a restaurant here. They have three already in Texas, and they looking to expand here into the Houston area. I have your property on 123 Street, and I want to consider that property or put that on the list to show them as a opportunity. I just want to ask a few questions. Is your landlord negotiable on that rate? Okay, great. What the year term? Would you think your landlord would agree to a 3-year, maybe a 2-year extension? Oh, okay, good. And then what's your commission on this? Is it 4%, 5%? What is your commission rate on this? And then, you can continue to ask other questions as you need them. How soon is it available? Are they going to give you any build out money? Just to kind of get the party talking. But what happens in that case is you're telling them that you got a possible client for them. And it's up to them to, if they want to do the right thing and give you the information you need to help them move that property. But if they don't think that you got anyone, they don't think that you're smart enough to kind of get the information, they're going to probably take advantage of you. Not all of them, but I can tell you some of them will. Okay. So do your due diligence prior to, taking your client out to see a property or putting this property on the list to show to your client. Okay. And that way you don't have to worry about if they're going to pay you a commission or not. So my suggestion to you would be always get that commission explained in an email, a text, or as always on an agreement between brokers or an agreement between broker and owner, and make sure it's a commercial form. Okay. Any questions on the commission? Okay. All right. Moving on. So I guess, if we don't have any questions, that's really it. I mean, like I said, it was a sweet and quick presentation just to kind of talk about those 5 different lease types. I'm hopeful that I gave you enough information. You can always reach out to me. This is my phone number and my email address if you have any questions. I am one of the commercial mentors here for the company. I've been doing real estate now for over 20 years. Commercial for the last 7 to 10 years. A little coaching and a lot of selling. But for the most part, whatever I could do to help you, I'll be more than happy to kind of share my understanding or point you in the right direction. And if there's nothing else, I guess I'll let you go unless anyone have anything. Okay, well, that's all I have. If you need anything else, please let me know. You can reach out to me. Thank you and take care. We'll see you next time.